good morning Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're delving into the non-banking finance sector and taking a look at two unrelated stocks, but again within the same sector of the Trinidad and Tobago Stock Exchange, and we're talking about JMMB Group Limited as well as National Enterprises Limited for their 9-month fiscal period ended December 2020. So it has been quite a challenging period for both companies, perhaps one more than the other. So let's take a look at the performance and what investors might expect in the upcoming quarters or upcoming months in terms of performance. So firstly, we're going to take a look at JMMB Group Limited or JMMBGL. And for that 9-month fiscal period, 9-month 2021 fiscal period ended December 2020, the group reported an earnings per share figure of 9 cents, which was a 16.5% decline of the 11 cents TT dollar equivalent reported in the prior comparable period. Operating revenues were down just around 5% from 785 million TT equivalent to just around 746 million TT equivalent. So some declines on the revenue side there. Operating expenses also declined from 505 million to 480 million. There was a marginal increase, well, in relative terms, but quite significant in proportionate terms, of impairment losses on financial assets from 18 to 33.5 million, leading to an overall profit before tax decline of 12.3% from 261 million to 229 million, and profit attributable to shareholders before dilution, of course, over the comparable periods, fell from 177 to 173.6 million in TT dollar equivalent. When we take a look at the operating revenues by segment or component, we can see that there has been some good news, but some not so good news across different segments. The good news is that net interest income continues to increase, and there was an 8% increase over the comparable period from 317 to 342 million TT dollar equivalent. Gains on securities trading, however, fell around 12.5% from 255 to 223 million. And cambio trading gains from foreign exchange margins would have fallen just around 30% from 102 to 71 million. Fees and commissions income fell marginally, just around 2.7% from 109 to 106. So JMMB is a stock that really hasn't gone too far or too fast in any direction over the past couple of months. And at a price of $1.85, it is trading at a price to earnings ratio of 11.1 times, which is in line with the sector average of 11.8 times, and offering investors a fairly unattractive dividend yield of 0.6% compared to the sector average of 1.1% at this point in time. So on the basis of relatively fair valuations, financial market stabilization, which should lend to some stabilization of earnings for JMMB Group, as well as the sluggish economic recovery being experienced across the entire region, including its main operating jurisdictions of Jamaica, Trinidad and Tobago, and the DOMREP. Bourse is going to maintain a neutral rating on JMMB for the time being. Turning quickly to National Enterprises Limited, and for their fiscal period ended December 2020, and that's their 9-month fiscal 2021 period, the group would have reported an earnings per share figure, or a loss per share rather, of 12 cents per share, which is a 17-cent swing from the 5 cents reported in the prior comparable period, that is the 9-month fiscal 2020 period. Now, on the bright side, dividend income from its investee companies were up just around 19.7% from $20.4 to $24.4 million. However, operating expenses swung from a gain in the 2020 fiscal period to a loss of 98 million in the 2021 fiscal period, and that was really attributable to downward revaluations of the investee company holdings when using the fair value method of accounting, leading to an ultimate loss for the group of 70.12 million for the period, compared to a gain of 30.82 million for the prior comparable period. So that's a 327.5% negative change over the comparable periods. Now, much of the challenges that NEL has been confronting has really come from the energy sector and its energy holdings, and we can see that it's not quite a pretty picture for the energy landscape and some of the related energy markets. And when we take a look at natural gas production at the domestic aggregate level, we can see that there's been a drop-off over the 9-month period of April to December 2019 to April to December of 2020 of just around 18 or 19%, from 3.5 billion standard cubic feet to 2.89 roughly billion standard cubic feet per day. so an 18% decline there. Natural gas prices have also fallen from $2.46 per MMBTU, using Henry Hub as a benchmark, to $2.03 over the comparable periods. Now, the good news is, at least on the pricing front, that thus far for the first 2 months of 2021, we have seen an improvement in natural gas prices. It's been averaging just around under $2.80 per MMBTU. So good news on the pricing front. The production front remains to be seen, and is currently, again, some major headwinds. On the natural gas liquid side, well, production would have also fallen 20% from 6 million barrels in the April to December 2019 period to just around 5 million barrels in the comparable period of 2020. Natural gas prices, or natural gas liquid prices, that is an average basket of propane, butane, and natural gasoline, would have fallen from 85 cents per gallon in that comparable period of 2019 to just around 20 cents for the April to December 2020 period. So a very significant, more than 75% decline over those comparable periods. The good news is, for the first 2 months of 2021, those prices have been averaging $1.07 per gallon. So certainly some promising news on the pricing front. Again, production remains challenging, and a similar trend would have featured across the ammonia and LNG markets, for which NEL has some exposure through its investee companies, particularly Tringen, as well as its exposure to Atlantic LNG Train 1. So at a price of $3.12, NEL is trading at, on the loss per share, there's no PE ratio available to compare to the sector average of 11.8 times. There is a dividend yield of 1.6% on a trailing basis compared to 1.1% for the sector. So some relative attraction or relative value there. And on the basis of stabilizing energy prices, but again, within the context of challenged domestic energy production and an overall sluggish economic recovery, Bourse is going to maintain its neutral rating on NEL at this point in time. Well, that's it for this week's edition. For more information, you can give us a call at 2-BORSE or 226-8773. Email us at invest@boursefinancial.com, or check out our website at bourseinvestment.com. Until next time, this has been the Bourse Report.